Let's bring in Mercer U.S. CIO, Olaolu Aganga. Great to have you back.
Thank you guys for having me.
So what's the smart thesis for investing outside of the U.S. right now? How much of it has to do with where a company's customers are versus where its workforce is?
Yeah, I mean, the fund flows this year in particular has been clear, right? Like we've seen great outperformance in the U.S. due to the Mag 7, that type of thing, and fund flows have been to Europe, or at least we've seen that this year. For us, where we've been doing a good amount of work is really based off of themes just because we want to make sure that the investment thesis persists. So one in particular is called the security of everything. Now, the security of everything controls, or at least it goes over a few different sectors. So whether it's energy transition, and the opportunity set is richer in Europe, so we do have to acknowledge that. It also touches on a number of different areas. So defense. Now, defense is either in the U.S. or in Europe, but some of the defense sectors that are critical, and then critical assets. So logistics, transportation, those types of things. And then, of course, cybersecurity. So a number of different areas all playing into the same theme, which is the security of everything, and that we think has a decent amount of opportunity set overseas as well.
With U.S. markets having outperformed for so long, where are you seeing the biggest valuation mismatches, the biggest kind of price opportunities?
I mean, the biggest valuation mismatch is obviously between the U.S. and, frankly, every other area. Now, emerging markets, China in particular, was somewhat depressed. And we did see fund flows out of that area. So the spread between the U.S. and emerging markets, China in particular, has widened for quite some time. But opportunity set, there's still a lot that's happening that is unclear with regards to politics. And then, geopolitics, obviously, is top of mind. So we are cautious on leaning into some of those areas. It is more the clearer themes that can be harnessed and companies invested back to defense and energy transition.
Yeah, and of course, when we talk about this geopolitical landscape, the security of everything, it makes sense because it does reach out into so many different areas. I am curious about energy transition opportunity in Europe and why it looks more attractive there specifically.
Europe has been more leading with regards to clean energy, clean tech, that type of thing. The company said in the environment has been more conducive over the last few years. I know here, obviously in the U.S., we had the Inflation Reduction Act that the policy at the time made some of those areas attractive, and now, we need to wait and see with regards to that.
So Bank of America's Global Fund Manager Survey finds that investors are the most underweight on the U.S. dollar in 20 years. Does that make sense to you? And if so, what are the ripple effects to these other markets?
So the spot performance for U.S. dollar, we've seen a decline. There's been a bit more of a diversification with regards to currency effects. But if you were to look at the dollar paired on some of the other global currencies and baskets, the dollar is actually still relatively elevated in terms of valuation. So we look at longer-term trends with regards to some of those patterns. The dollars versus some of the other global currencies in pairs is elevated. The spot market, though, yes, we've seen a bit of a decline.
What are the best defensive plays that you're drawing up for investors right now?
For us, we don't drill down to the particular companies, but defensive plays, I think asset allocation very much is still private markets, is still areas where you can get yield and coupon. We've talked about private credit a little bit. There's still a lot of opportunity set there. And even in the U.S., some of the legislation is opening up to be able to make that available to investors, even in retirement plans. Yeah,
when we talk about some of that legislation or some of the regulatory environment shifting, I just think about something like permitting. You've come on here and talked about the opportunities in infrastructure. Has the door blown open on that in terms of investing, particularly in the private markets?
Not quite yet with regards to permitting. So we're seeing a slow movement with regards to that. Real estate, which is part of the real assets continuum, is one that we think has bottomed up. We're looking at that and investing in that ourselves in this type of inflationary environment. Like that's actually a pretty good area for us to focus on.